Hello there, I'm Azaria Tagaya, and you're watching another episode of Ringgit Cents Plus. This week, we're taking a look at insurance claims, specifically some important things to take note of regarding travel and health insurance. But first, we want to talk to you about student loans. Now, the questions we're asking you today is, should students repay their loans, and how much should they pay every month? Well, in December last year, PTPTN announced a controversial repayment scheme. The scheme outlines deductions ranging from 2% to 15% of a borrower's salary. For fresh graduates earning 2,000 ringgit, they would have to pay 40 ringgit a month, while those earning 8,000 ringgit had to pay 1,200 ringgit a month. The plan was soon withdrawn after many complaints from borrowers. Many of the borrowers said they could not afford the repayment and also attacked the Pakatan Harapan government for not fulfilling its election pledge of only making borrowers repay when their salary reached 4,000 ringgit a month. Now, PTPTN, or the National Higher Education Fund Corporation, said it will now seek the feedback of stakeholders before coming up with a new scheme. Well, we at Ringgit Cents Plus wanted to look into this. Is it really difficult for fresh graduates to repay their student loans? And what would happen if they deferred their loan repayments until later? The Credit Counseling and Debt Management Agency, or AKPK, deals with many fresh graduates who find themselves in financial constraints when they fail to pay their debts. They also advise and counsel university students on proper financial management before they graduate. We asked Nirmala Subramaniam, the Financial Education Department Manager, on how much fresh graduates should set aside to pay for their PTPTN loan each month.
As an ideal situation, we would definitely say anything below 30 to 40% monthly that they can afford. But of course, they have to see their main expenses like food, lodging, and transport. So these are the basic necessities. So once I've calculated my basic necessities, whatever balance that I have, I should try to repay back. Of course, minus my savings as well for emergencies. So if I can even have a minimum of 10 to 20%, that's good enough to pay. In fact, I think sometimes the repayment is lower than 10%. So, but try to pay as much as I can when my commitments are low before I head towards the next commitment.
While it may sound tempting for PTPTN borrowers to defer their payment until they earn 4,000 ringgit, here's why it can be a bad idea.
If you defer a loan, you have commitments coming in future. So with more commitments coming in future, you would not know whether you can afford it then. So might as well you try to afford it now if you really can. Unless you are truly jobless, without any income, with zero payment, then that's something you may want to defer, right? Rather than having a bad record. But if you can at least afford 50, the most minimum amount, I think you can still negotiate with them to pay a certain amount and pay up at least the most minimum. But deferment is definitely not advisable because you would not know what comes in future. We think that we will be better off, but the more better we get, the more expenses we are going to have also.
As your income increases, so will your expenses. You might be planning your wedding or maybe to have kids, and all this will take up a huge part of your income. Not paying off your student loan also affects your credit score, so it lowers your chances of getting a home or business loan later on in life. So prioritize paying off your student loan before getting another loan. When fresh graduates start working, it's very tempting to buy a car, thus taking up another financial responsibility. Nirmala says they should examine their monthly budget to see if they can actually afford to own a car and repay their student loan at the same time.
Of course, for students, the first loan they encounter is their student loan, and we will definitely advise them to say, okay, if you have taken a loan, it's a commitment to pay back. So please pay them up before you even think about the next commitment that you're going for.
Besides the car loan, there are also other hidden costs that they may not be aware of, such as fuel, tolls, insurance, and maintenance. All this will eventually add up. Ask yourself, do you have alternatives? Can you take public transport? And would it be cheaper to buy a second-hand car? Another mistake fresh graduates make is overspending with their credit cards. Instead of using it as a convenient payment device, they end up spending money that they don't have. We asked Nirmala, what should fresh graduates do in the first year of their working life?
Yeah, they think they're living just for the current period. They don't, what we always see is like they don't really see for the future. They say, it's my life now, it's like my time to enjoy now, and suddenly I'm getting a salary, and like all this while I've been living on an allowance, right? And you've got to ask, you've got to beg for every extra ringgit, you've got to work really hard, study, so you had the time but you didn't have the money. So now you have the time and you have the money at this small period. Later you will have money but you won't have time. So this is a period they will say that I want to enjoy. This is my time to enjoy. So once commitment comes in, I'm not going to be able. So they don't think it's okay, I can start saving later for my retirement. But actually the rule of retirement saving is actually start your saving with your first paycheck.
Sit down and plan all your long-term goals, such as paying off your student loan, marriage, buying a home, and other things you want to achieve.
Get advice. AKPK do provide counseling as well, financial counseling as well. They can call up to AKPK and ask, okay, I'm seeing how can I actually plan my finances. So you could get advice, go through our portal at www.akpk.org.my, at our learning portal. So they could actually get some tips.
Our final advice is if you have a PTPTN student loan, don't wait until they come up with a new repayment schedule. Start paying off your loan now. The longer you wait, the more painful it's going to be later on in life. So what do you think? Should PTPTN borrowers pay back their student loan? Let us know on our Facebook page. After the break, we take a look at travel insurance. What are medical exclusions and when can you actually make a claim from your policy? The answers after this. Back on Ringgit Cents Plus with me, Azaria Tagaya. Now, a few weeks ago, we highlighted the plight of Sahrum Ahmad, who had traveled to London but had a stroke there and ended up in hospital. He had bought travel insurance before traveling, but his claims were denied. The reasons given was that it was a pre-existing condition. His family had to ask for donations from the public to pay for his medical bills and medical repatriation. Shahram has since safely returned home to Malaysia. Now, received many comments from viewers asking about travel insurance. We were also contacted by Asa Afin General Insurance, which had insured Shahram Ahmad's trip, to explain more about how travel insurance works. We spoke to their CEO, Emmanuel Niwe, to hear their side of the story of what happens when insurance companies receive a claim. According to Emmanuel, when something unexpected happens overseas, the first thing the travel insurance policy holder should do is to contact the insurance company. There will be an international phone number they can call. If you're traveling alone, make sure your family or friends know that you have travel insurance so that they can inform the insurance company in Malaysia if something bad does happen to you. Once the insurance company is informed, then they will activate the assistance team to assess the situation. If you're hospitalized, then they would need a medical report from the doctor treating you. Once the claim is approved by the insurance company, then it moves pretty fast, where the insurance company will pay the medical bill and repatriate you. If your policy covers it, they will even fly your loved ones over to visit you in the hospital. For travel inconveniences like lost or damaged luggage and delayed flights, policyholders would have to pay first and then come home to submit their documentation to the insurance company. Some even allow you to submit the claims online. online now. We asked Emmanuel why Shahrum's stroke was defined as a pre-existing condition and was not covered by his travel insurance. Emmanuel told us they couldn't reveal the full details of what happened as they have to respect Shahrum's right to medical privacy. But he did explain how AXA handles claims like these.
We were notified of the fact he went for brain surgery or treatment in London the 31st of December, so a bit of time later. As soon as we were made aware of it, we make contact with the family, as well as we ask our AXA assistants locally to support the patient and the family. The next step for us, as I mentioned before, we ask to get access to the medical report issued by the doctor because of time zone difference and probably the fact that this was obviously quite far away. It took, I won't say so long, but a bit of time. At the time that the family wanted to repatriate very quickly the patient, we didn't even know exactly the full extent of the situation. So as soon as we get the doctor reports, we had to make a call, a difficult call, but we had to make the call we did. And after that, obviously, all other consequence, none of the cost was falling under the coverage of the policy. And obviously, from a customer perspective, it's a very difficult situation, we have to admit.
We asked him to define pre-existing conditions and in what situations would a travel insurance policy not pay out.
Meaning it's not accidental, and the illness is somewhere expected, coming from existing situation for the person. Okay. So this exclusion on pre-existing condition also exists in the standard health policy, where we have a more underwriting question, when we ask more questions to the customer to identify what plan will fit to his needs, and in some circumstances related to pre-existing condition, the uncertainty of the risk is no longer there. There is a likelihood that things should happen. And again, when you get a doctor report that clearly stated some facts, you have to admit that, or not, but you may have to admit that the cover is not there. I just want to say a few words. We are dealing with more than 300,000 claims a year. 95% of them go very smoothly. And obviously, when we have some, the main one we have issues are of two nature. The one, there is a misunderstanding or a not fully understanding of what the policy covers. And the other one is the fraudulent act, which is a different story. People have to understand that travel insurance is not a health insurance policy. It can cover, but on very specific conditions.
So, in what situations would a travel insurance cover someone's illnesses then?
It can be you go to a restaurant, you eat something which is not good, you suffer from a kind of contamination, you are sick, and so you can go to hospital. You travel and suddenly you get a tooth infection, you need to go to a dentist, it's covered. You are walking in the street and you are hit by a bus, you are down. Broken legs or whatever, even worse, you are covered. So it's what I would say for infection, for contamination, it's an illness and it's unexpected. If you have an accident, it's accidental, so there is no specific point. If you have a long-standing condition that is there before and still there after, it's excluded as a pre-existing condition.
Emmanuel advises those who have pre-existing medical conditions to check with their doctor before traveling. Are there any medications they should bring along? Is there any strenuous activities they should avoid, like hiking or taking long walks? Those who are pregnant should also know most travel policies would not cover problems arising from their pregnancy. So travel at your own risk. Right now, the most popular way to buy travel insurance is online, and Emmanuel advises consumers to always read the policy carefully. If they have any questions, ask the online platform selling it or speak to the insurance company itself to find out what exactly it does cover. If you're traveling with a travel package organized by a travel agency, ask them what travel policy covers you. What is the emergency phone number for the insurance company? And give them your emergency contact person back home in Malaysia should anything happen to you. What's important here is that you need to know what you're buying before you travel. Buying a travel insurance policy doesn't mean you're covered if you have a pre-existing condition. It will just give you a false sense of security if you aren't actually covered. If you want to share what you just watched, go ahead and visit our Facebook page. We also have other stories on there about personal finance that you can learn more about. After the break, we take a look at other insurance claims. What else should you know? We'll be back with the answers in a bit. Hey there, still with me, Azaria Tagaya on Ringgit Sense Plus. And as promised, in this part of the show, we take a look at other aspects of insurance that you should know about. If you're wondering how you go about making a claim on your health insurance, then here's where you should pay attention. We speak to Ringgit Plus to find out some important terms to take note of when getting yourself medically insured. Also, what should you look at when making a side-by-side comparison? Let's watch. So you've purchased a health insurance policy for a rainy day, but you're not exactly sure how to go about making a claim just in case you need to one day. We turned to Lucas Oy, Director of Insurance at Ringgit Plus, to find out how insurance claims are made.
I think the important thing is to carry your medical card with you at all times. So if you are in such a situation, typically when you get to the hospital, the nursing staff there will find your wallet and see whether you have a medical card. If you do, fantastic, because that means that, especially if your policy is still active, what the hospital will do is they will swipe your card to validate that the policy is still active, and you will be able to receive treatment at the private hospital. In the case where you don't have a medical card, it will be more suitable to go to or they will transfer you to a government hospital.
Lucas also helps to clear up some insurance terminology.
A letter of guarantee is a document from the insurer to confirm that you are an active policyholder, and they will pay for X amount of claims for a specific cause. Annual limit means it's the total amount of claims that an insurer will pay for your medical expenses each year. So if you bought an annual limit of 50,000 ringgit and your total claims for the year was 60,000, the insurer will only pay 50,000. You will have to pay the remaining 10,000 ringgit. For lifetime limit, it means until the policy is cancelled or is refunded or not active anymore, the total accumulated medical expenses will be borne by the insurer. For example, sometimes you have a lifetime limit of 10 million ringgit, which means that if your expenses goes beyond 10 million ringgit, for the lifetime of the policy, you will have to pay any ringgit above that amount. Or to put it another way, the insurer will only pay the first 10 million of the policy. So sometimes if you make claims every year because you've got a very severe case of cancer, sometimes it's a good idea to buy the policy that covers with unlimited lifetime limit, which means that you have peace of mind regardless of how much it's going to cost you, you will be covered.
Another thing consumers should know is whether your insurance coverage is sufficient to cover treatments for critical illnesses such as cancer.
Well, the important thing is to ensure that you already had coverage before you get diagnosed, because you can't buy it after you've been diagnosed. That's why it's very important to buy insurance before you get diagnosed with any critical illness. There are several things you can do. There are several policies that you can buy. You can buy something like critical illness, which pays the customer a one lump sum amount if diagnosed with a specific critical illness like cancer, diabetes, stroke, etc. There are other forms like hospitalization income, where for every day that you are hospitalized, the insurer will pay you 100, 200, 300 ringgit every day, depending on the amount that you bought for each day that you are hospitalized, which is meant to kind of cover your income while you are unable to work.
It's crucial that consumers read through the policy and take note that some treatments will not be covered by medical insurance.
Some treatments will be things like HIV, if you've contracted HIV, anything related to pregnancy, unless you've bought a specific policy for pregnancy. It will not cover you for self-inflicted hurt. These are just some examples.
In some cases, some insurers will cover dental costs, while others do not. In this regard, Lucas advises consumers to check the details thoroughly to see whether dental treatment is included. On the Ringgit Plus website, users can easily compare what each insurer offers.
For health insurance, like a medical product, you can compare things like your annual limit, your lifetime limit, the inpatient and outpatient benefits. You can compare where the hospitals you can go to for treatment for each insurer. You can compare what are the costs involved for each product as well. These are kind of key, important deciding factors before making a decision.
The thing to note about making a claim is the speed in which the process will be completed.
It really depends on the severity of the incident and also the type of claim. For things like, in the case where you had an accident and you unfortunately you died, it's important to note whether or not the customer had a nominee on the policy. Having a nominee on the policy means that claims will be paid out a lot faster than having to go through a claims process where you need to go to the court to get a letter of administration to decide who gets the money or the benefits. Yeah.
In a natural death scenario, the process can take up a number of weeks, assuming a nominee has been named and the required documents are provided. But it also understandably varies from one insurance company to another, which is why it's crucial that you compare before you buy. Well, we hope the tips shared today have been useful for you. If you know someone who should watch it, go to our Facebook page and share the link with them. Take some time to invest in yourself and learn more about personal finance there as well. I'm Azaria Tagaya signing off. We'll see you next week, and until then, remember to invest and save wisely.